Right, assalamu alaikum everyone. And today, I just wanted to have a random conversation with you guys. I think there's things that I might share with you a little bit in this one whole video, and this one video can actually tell you and teach you a lot of stuff. Okay, regarding trading. One of the things that I'm going to start with is a dialogue, maybe a sentence, and we're going to get into the details of this sentence, and that is, if you want to lose in trading, you can really lose in trading, and if you want to win in trading, you can also win in trading. The choice is definitely just yours. If you want to stick until the end and learn about the details of what I'm preaching today, well, do so. Stick till the end. If you don't want to hear what I have to say and share with you, that's fine as well. So if you just want to stick until the end, listen until the end, because for 7 years of trading, I think there are some things that I can tell you that can sharp you up with how your trading career is going to be. Number one is your money and your emotions are linked with one another in every way possible. They're so damn tightly linked with one another that people do not really care or don't realize how much emotions and money are interlinked with one another, right? Whenever you start trading, a lot of people don't even ask themselves, why are they trading? Why do people come into crypto to trade? Why do you do that? Why are you in crypto? Right? Why are you in crypto? Crypto doesn't care about you. The market doesn't care about you if you want to retire your parents. The market doesn't care about you want to buy something. The market doesn't care about your monthly pay. The market doesn't care about your bills, your school fees, your wife and kids' expenses. It doesn't care about any of that. The market is here for itself. It's selfish. But do you even realize that? That's the first question that I think a lot of people skip, and this comes from a psychological level, right? Everything starts with psychology, and then it actually goes all the way down to chart reading. And people don't really care about psychology until they don't realize that they want to actually understand things or two about psychology. So when I was saying that your money and the fact that your emotions are linked to one another is simple, because if I gave you $1,000 right now, what are you going to do with $1,000? How are you going to um, spend that $1,000 to actually get more money, right? What a lot of people just want to do is they heard successful stories and they've heard other people who actually made it overnight, and they want to do the same, which are 90% lies, right? 90% of the people just lie about their success because they want to get your attention. I'm not saying there are people who didn't make it big. There are definitely people who did make it big, but they knew what they were doing, or probably is they lost a lot before they actually make it big. But what you guys see on social media most of the time is that is success. We see a lot of people becoming so successful that we start to feel bad about ourselves. We start feeling crypto, even in general life, right? Even in general life, you look at Instagram and everyone is just successful. Everyone is a car. Oh, an interview. This guy comes with a microphone. Hey, what do you do for a living? Right? We actually see what all these things people. No one comes to me to ask me what I'm doing for a living. Maybe it's not because I'm successful. Maybe just not yet. Okay, but the years that I've actually put in trading, I haven't really got a Lambo. I haven't really got a Ferrari just yet. I haven't make it big just yet. But I've been in the game long enough. I've been in the game long enough because there are some set of rules that I had to acquire the hard way as well, and learn from internet, learn from different blogs. Went on to create a course to teach people, because people realize that the things that I'm doing make a lot of sense. There are some time in my life where I have been able to trade successfully. I followed some set of rules, my own style, and I was successful. There was some time that I actually didn't follow my own rule and I wasn't very successful. But what are the things that made me fail? And what are the things that made me successful? These are tiny details, and it starts with the fact that crypto is a controlled asset. And when I say by controlled asset, there are 30,000 different cryptocurrencies out there in the world, and each and every single cryptocurrency is controlled, is a controlled entity from Bitcoin all the way until the 30,000 project out there is controlled. And when you trade, you will sometimes look like the most stupid person in the room. Um, and at the same time, you're also going to have an impression that you're the most genius person in the room because trading is controlled. You cannot do anything about it. Sometimes you want to prove to the world that you're so good, you're so amazing. You maybe you learn about head and shoulder, maybe you learn about ascending triangle and whatnot, and then you call your friend, you call your friend over to your house, and then you tell him, hey, look, I'm actually gonna have a trade today because I saw a head and shoulder, or maybe a simple bear flag. Previously that bear flag worked out, this time same time frame, same setup, same idea, but it doesn't play out. And then your friend makes fun of you. How many Instagram reels have we seen like this, where somebody places in a trade and then they fail, they have their friend, and then they start to laugh at their friends, and then you feel stupid, completely stupid, and Bitcoin will make you feel stupid at some time. The reason is because it is controlled, and there are two things about this that you can do. Number one is deal with it, right? Accept it, deal with it, create your own strategies and follow them. And number two is walk away from crypto. Maybe there's something else out there in the world that you can do. You don't have to be a crypto trader to make it big or be successful. There's so many things in the world that you can do. Walk away, pick something that is much better. In my case, I find myself a bit lucky, I may say. Maybe I'm blessed in some way. Maybe it's a godly thing that I have this some abilities somehow to just predict the market all of a sudden, and I can tell you what is going to happen next. But there's a little bit of vibe. There's a little bit of energy in crypto. You see, there's three things in crypto. There's like technical analysis, there's fundamental analysis, and then there's sentimental analysis. Okay, and what is sentimental analysis? It comes with the fact that you're experiencing crypto. You've been trading for a long, long time, and you might have come across, even yourself, you might have come across a time when you look at a setup and you tell yourself, I think this is going to go up. I think I should buy here. It's going to go up there. You have that feeling. It's a vibe. You cannot explain. Maybe a sixth sense, maybe God's feeling. And that's why we call it sentimental for a reason. Sometime you really have to feel something. And sometime crypto, to be precise, is an art. Is an art. Okay? Is an art. And you have to understand that there are so many different ways of presenting an art. For example, if you talk about music industry, there's hip hop, there's Bhangra, there's Bollywood, there's R&B, there's reggae, there is Turkish music, there is piano, there is sad songs, there's happy song, party song. You have all this genre together, but they're all art presented in different ways. Everyone is their own style of actually presenting the art. If I was a Picasso and I have to paint my own picture, I have my own way of actually painting my own picture. Maybe I like the Ghibli studio style art. Maybe I'm gonna use oil painting. Maybe I'll use watercolors. There are so many ways. Maybe I want to use pencil just to sketch people's faces. Maybe that's my strength of actually presenting my art. When it comes down to crypto, you also use a certain art. You really, as I said back in the start of the video, if I gave you $1,000, what are you gonna do with $1,000? How are you going to trade with $1,000? And if you wanted to do it the right way, you will be successful. And if you wanted to do this the wrong way, you will fail big time. And one more thing is, stop looking at the charts every single second after you take a trade. You keep staring at the charts all the time thinking it's going to make a difference. It doesn't. Now, while that sounds very funny, the thing is, it has something to do with a psychological aspect. There's a lot of psyche behind what I just said. And as I said before, it starts with how you think, how you make up all these things in your brain, and then it boils down to chart reading and candlestick. Chart reading and candlestick are secondary. And this is something even I talk about the course, right? I've created this, by the way, 3 years ago, I've created this whole course, created it until the very end. And I don't want to promote it, but the thing is, yes, it is damn good, right? I'll say not because I created it or it's mine, but it is backed by how many hundred of students have been taking it. And I've never even had a student come to me say that they didn't understand what I've been teaching in there. And these are things that I've talked about that people don't realize that they needed to listen until I didn't make that course. And then it was undiscovered information that real trader learn first before they actually become successful in the market. So if you had $1,000, a lot of people what they're going to do is open up maybe 100x. They're going to open up 50x. And when we talk about leverage, there are coins. Now this is another tip. There are coins that are good for trading with $1,000, and there are coins that are not good for you to trade with $1,000. I might actually want to share some screenshot as well of an exchange, and there is something known as turnover USDT within 24 hours. Now, what you want to do if you had $1,000, right? You want to look for coins that are trending during the past 24 hours. There are projects, and there are so many projects out there that you can actually trade. I think analyze 10. Look at a trading chart for 10 times, 20 times, until you don't really understand if it's a good idea for you to enter, which one looks the safest, and use maximum 2 to 3% as risk maximum, right? And when it comes down to $1,000, a lot of people are going to trade with a whole $1,000, open up 50x, 30x, 20x. And that's why I say sometimes it's like a taunt when I say that you cannot handle spot trading and you're going to leverage futures. Really, you cannot handle 1x and you're trying to do 50x. And again, as I said, your emotions are totally linked with your money. The more money you have, the more emotions are going to be disturbed. And even worse is that the bigger you lose, you're going to lose your sense of logic. You're not going to analyze the market properly. And what happens when you look at the market every single minute? I'm going to go into details, and this happens with everyone. It happens with everyone. So, for example, you have your phone, you've opened up a trade, you've put in 20x, 30x, whatever it is. Greed kicks in. You need a lot of money overnight because you think you can make a fortune in one day. What happened to a little bit of profit that you make during the first 2 hours, 1 hour? So you look at your phone, right? You're staring at your phone all the time and you're thinking that why is this trade not happening for me? You've already entered, maybe you're plus $200, and then now you're all of a sudden minus $200, and then you go again back to $200. It's consolidating, it's fluctuating. You don't understand what's going on. After 3 hours, nothing happened. After 4 hours, you still have your stop losses, nothing happened. At one point, you went from $1,000, and all of a sudden, you have $500 in profit. And then, at the end of the day, when you're eating food and you're eating food, you have your phone, you keep staring at that thing for the past 3 hours, and all of a sudden, your stop loss is taken away. And when your stop loss is taken away, you come in revenge mode. You need your money back because you lost a big amount of money. You went from $1,000 down to $500. It's gone. And any day you do this, you will lose. And that's why I say if you want to lose in crypto, you will lose in crypto. If you want to win, you can win. And the only way to win is just to do the opposite and actually not do something like that where you don't even have money management, where you don't have risk management. So if I had 1,000, I would actually start slow, and this is where I actually like to bring the concept of cricket and football. So I haven't learned this from any YouTuber at all, and these are things that I learned by myself throughout my trading career by observing other different fields of life. And one of them is cricket. If you have watched cricket, I think a lot of my audience know what cricket is and how we play cricket. Or if you don't know that, you know how to play football, of course. So majority of you are going to actually relate to this one. So when you play cricket, and let's say it's a 50 over match, and what happens is that you have a team, 11 people in your team, and all of them are amazing batsmen. All of them are amazing run chasers and scorers, and they can hit big sixes and boundaries. In football, you have the Messis, you have the Ronaldos. It's an amazing, strong team, and then all of a sudden, the strong team, for example, in cricket, has goes down 5 wickets in the first 5 overs. 5 people get out, and there's only one opener remaining. The opener doesn't get out, right? And the scoreboard says that you have 11 score, and it's 5 overs. All 5 overs have gone. There's 45 overs left, and also 5 wickets has fallen down. There's only 5 people remaining to come and bat. What are you going to do? What is the opener of the match going to do? Even if he's the best batsman, right? Let's take Virat Kohli. Let's take Babar Azam, whoever you consider the best batsman right now, right? Even if they're the best, do you really think after losing so much wickets and they're still very low on the scoreboard, do you think they're going to go and hit six and fours? No. Even if they have the ability to do that, they're going to take single and doubles. They need to complete 45 over. They have to chill, calm down, relax, and do something that we call strike rotation, build up the runs, build up a partnership. So they're going to take single and double, maybe stop a lot of times, not even take any run. There could be an opportunity to run, but they're not going to do that. But when it comes at the end, when the time is right, when the build is done, the partnership is amazing, then they actually start to hit fours and sixes and whatnot. When you have $1,000, that's what you want to do. Maybe the first time you trade, you can take 1% risk. You can open up $1,000 and lose $10. That's fine. You still have $990. Okay, no issues. But let's say you get hit and you come down to $950. What I will do in this case, I would actually use $300 to trade. And I would actually try to trade $300 a couple of times until I don't make it back to $1,000. Again, we're painting the picture like Picasso does, right? It's your own style of trading of painting the picture. Now, if I actually go from $1,000 to $950, I use $300 again, and I try to look for 1% risk and at least 5% reward. You want to use a reward of at least 5%, and you have to understand this is another tiny detail, another tip that I want to tell you. And it matters a lot. As I said, the turnover of a coin, the volume of a coin in the past 24 hours is important because, again, this is a controlled asset. Crypto is very controlled. If you go to a newly launched meme coin and you use $1,000, you may lose $1,000 all in all, right? And your $1,000 is going to be big, especially if you have almost $500,000 in the past 24 hours. That's not a coin you want to trade even $1,000 with. And I'm going to tell you the reason is because it is very easy for three investors to have $450,000 in a coin in the past 24 hours. And they can manipulate, they can control the direction of the market. The market is climbing and climbing, and you think everything is okay. As soon as you enter, it goes down. The reality is there is someone that actually dumps it. That's the truth. This is what you wanted to hear all your life. Today I'm telling you this, right? There is someone behind the coin that pumps it and dumps it, even if it's Bitcoin. Bitcoin has institutional trader, and that's someone we call market maker. The market makers are there and they make the markets, and that's why it's possible for you to even trade and win and do technical analysis as well. It's not happening randomly. There are people behind it that creates this chart patterns. They make the market, and that's who we call market makers. So if you want to trade $1,000, look for a coin that has at least $10 million in the past 24 hours. And that actually means that the money is flowing, and it's a lot of money flowing. And you can use $1,000, and that's the maximum you want to use. If you can find a coin that has at least 100 million in the past 24 hours, that's going to be much more safe for you. Starting with 100 million. And if you have $10,000, for example, you're using even $10,000 to actually trade something, Bitcoin is your best bet, Ethereum is your best bet, XRP could actually even be your best bet. Other than that, other than these three coins, it is going to be extremely difficult. Manipulation is going to be at its peak, right? Understand this, people. When you enter a trade, the whales the big players, they get to see how much money is happening in real time, the transactions that are happening in real time, and they can filter with how much you're investing. So if you use $10,000 and you open up 100x at a certain coin, thinking that you open up a $1 million position, and even if I get 10%, that's going to be like $100,000, and you can retire overnight, you're going to lose. And the reason you're going to lose is because even if a coin has $10 million in volume, it could be that $9 million belongs to the bigger players, right? And they can sell $9 million, and that means selling $9 million out of 10 million means that 90% of the money is being eliminated. That means that you can lose 90% of your money. And if you have 100x, 50x leverage, you're going to be liquidated. You're going to lose $10,000 thinking that you will win $100,000. So even if you're good at trading and whatnot, if you select the wrong coins, you will lose money. And people do not care about volume. They don't have any idea about volume. And volume is really, really important. So these are levels. Maybe if you have $1,000, look for a coin that has at least $10 million, right? If you have $10,000, look for a coin that has at least $1 billion. Even Pepe could be a meme coin, but it has, sometimes it surpasses $1 billion in volume within 24 hours. I'm not talking about the whole market cap. I'm talking about the market cap is even way more than that. But when it comes to like 24-hour data volume, it surpasses $1 billion, and it could actually be a safe coin for you to trade $5,000 or $10,000. But even if you use $1 million, that's going to be alerting to a lot of these people. Even as a matter of fact, if you use $1 million on Bitcoin, it is still going to alert the Bitcoin whales. They're actually going to manipulate. And that's why you see a lot of times that a bear flag that worked out previously didn't work out this time, even though everything was the same, the setups were actually the same and whatnot. That's another tip that you guys have to really take from me from this point onwards. And when you do a technical analysis, you have looked at the coin for so many times. You study the coin, you draw the support and resistance, you take the Fib retracement, and then you feel like this is a good entry. I have 1% risk. You take the proper money management, and you take 1% every day with consistency, and just do your best, right? Take 2 hours, take 3 hours, look at 10 different coins and study them in the past 24 hours by filtering the volume, right? Depending on how much money you have. And then you try to take a trade. Maybe you will lose, that's fine. But I can guarantee you this. If you just stick to 1% every day, especially when you're starting out, or even if you're a pro trader, doesn't matter, right? You're just consistent with 1%, maximum maybe 2 trades per day, because over trading is a beginner stuff and you'll just lose money a lot. You won't even have the capacity to think straight for the next trade. So don't do that. Just take 1 to 2 every day, maybe even 2 trades within 2 days. That's fine. You're not here to prove to anyone that you are a winner. Don't prove to anyone. You're here to make money, and you're here to be careful when making that money. So do things slowly and consistently, right? Any coin that has more than $10 million when you have $1,000, any coin that has $1 billion when you're trading with $10,000, and anything above $100,000, go for Bitcoin and go for Ethereum. Don't trade on any other coin, right? And if you have $5 and you need a lot of money all of a sudden, it's the other way around. You can go to newly launched meme coins, which are, changing 100% within 5 minutes. They're pumping and dumping very, very fast. It's high risk, high reward kind of a market. But then again, for those people who have $10, $15, then you might actually even prefer a coin that has $30,000 within 24 hours. Right? That's not a big deal. You can do that, but you have to understand, you get in and you get out very, very quickly, because your $10 can go away. That means if you have $100, you can use $10 a couple of times until you don't get successful. And who knows, from $100 you could go to $1,000. That's actually another type of possibility. These tips that I'm telling you are absolutely serious, and especially when it comes to volume, you really need to have an amazing game of volume. If you don't have an amazing game of volume, you're going to actually be wrecked completely. Hope you learned some few things, regarding this. Again, some more summary of what I said. Emotions are linked to your money. When you control your emotions and when you control your money, you will be able to do technical analysis, right? If you get a little bit greedy, you're going to pay big time. Trust me on that one. You're going to lose all your money because you will get trapped into what the market wants you to do. The market knows your psychology so well, so they're going to take advantage of how you think, how angry you're going to get. They're just going to try to shake you off your game plan, and you will get shaken off your game plan. The days when I was very disciplined, I've been winning a lot of money, right? All of you know this. My private members know this. And when I actually trade out of fun, I have a lot of money now, I can actually play around. I break the rules and I pay heavy fine when I break the rules. And then I have to go back to my rules and then I win again over and over. Sometimes I wonder, what if I just stick to my own trading plan all the time? I'm just going to win all the time. It's the truth. There have been a lot of successful traders who have been able to win all the time because they stick to their trading plan. Another summary here is that the volume is really important behind a coin. Filter out coins that have more than $10 million just to be on the safe side, just so that you can give yourself a chance for a coin to actually play out. Don't look at the chart that is pumping so high, dumping so high, unless you don't put a check on the volume. The volume is really, really important. And because a coin can pump really high within 10 minutes and you enter late, right? You enter into that coin absolutely late, and the people behind the coin can dump it as soon as you enter. Then what's the reason for that coin? Nothing, because you didn't actually put any checks on the volume. And then again, risk management, right? One of the biggest, most important thing. You cannot compromise on risk management in your whole life, right? Keep this in mind. Manage your money. As I said, if you have $1,000, start with $300. Make your way up. If you make 50, let's say $100 and you're using $300, use $500. Make a little bit of a jump, right? If you go from $500 and then you move up to $1,500, then maybe trade with $1,000. If you lose $100 and go to $1,400, switch back to $500. If you lose another $100, switch back to $300. It is an art, right? It is how you really shape your money. It is how you're careful with your money. And finally, take 2 to 3 hours, open up 10 different coins, put a volume filter, and try to look at the best setup that makes a lot of sense to you. Put the trade, close the chart, walk away. Don't look at the charts all the time. It's not going to help, trust me. The reason is you did your analysis for 1 hour or 2 hours. That's enough. You have already spent time looking at the chart long enough. You don't have to do it again. You saw the stop loss. You saw it again and again and again. And you came to the conclusion that, yes, this is the best stop that I can place. It's 1%, 1.5, 2%. The reward is 5%. Take the trade, walk away. And that day, if you lose, fine. If you didn't, fine. Okay? And also, when the market rises up a little bit, when you win, let's say the market pushes like 2% up, you're 2% up, change your stop losses. Bring your stop losses to your entry, trail your stop losses. This is why the reason why this video was important, right? This is a small tip, but a very important one, right? So if your stop loss is at 1.1, your entry is at $1, and the market actually changes by 2%, change your stop losses from 1.1 to your entry level, because when the market comes down again and all of a sudden there's manipulation going on, then you will not lose the trade, and then you can actually open up another different trade, and you can start over again, right? And then do this for 30 days and look at your result. If you're not good, go back for paper trading. Don't use real money. Don't use real money. Do paper trading until you're not finding success above failures. I think that's all for this video. It was a very random conversation, but I felt like, you know what, let's just lay down some knowledge, information. I don't know which one of you guys out there, maybe one person is going to actually find this very useful, maybe 10, maybe all of you, but I'm pretty sure there is a point that has struck in your head, and hopefully from this, as soon as this video ends from tomorrow, I'm pretty sure you're going to wake up a very different person with a different mindset. And then again, I do have a 19-hour course, right? You can take it if you want to learn. You can message me, just say, hey, we need that. I kind of like want to learn. Take it, maybe give it a shot. It's actually going to help you like I've been able to help all these other people trade and trade even for myself. That's all. I'm going to with probably a next episode, a next